Good morning and welcome to Wake Up Real Estate. It's Mortgage and Motivation Monday. Hope you all had a great weekend. Please like, comment, subscribe, share, smash the bell, all those good things. Unfortunately, no Ryan this morning. He's having some I don't know. He let me know that he's having airline and car dealership issues. So we'll get the full backstory tomorrow, maybe not. I don't know. And we may have a guest. We may have a guest at some point. Jordan, our mortgage team leader and guideline extraordinaire, etc. He may come and join us at some point to talk a little bit mortgage for mortgage and marketing. I'm sorry, mortgage and motivation Monday. These sessions are kind of always about marketing in some way, shape, or form. Good morning to you, Mike. Good morning. Good morning. I'm curious. Those of you listening, comment below. Did any of you have an open house or buyer appointments or showings this weekend? And if so, how did it go? How did they go? Go ahead and comment below. The weather here continues to be incredible. And hopefully it's the same for you for your open houses and showing appointments as well. So let me share my screen here. Share my screen. Start with a little motivation on a Monday morning. Posted this morning. A few bad chapters does not mean your story is over. A few bad chapters does not mean your story is over. And I'll take that a couple of steps farther. Not just a few bad chapters. It might be a few bad sentences or a few bad paragraphs, not even a full chapter, right? Don't get discouraged. Stay the course and keep doing the right things. The right things compounded over time will yield positive results if you stay at it long enough. I want to see. I just want to double check here. We may have to share the social post of the day later on the Wake Up Real Estate site. Yeah, looks like we'll have to wait on that. I was hoping that maybe Ryan had posted. I was playing catch up and honestly was just kind of easing into the week this morning. I was doing a few things, but Mark had an open house with 2 neighbors popping by. Yeah, that's unfortunate. Well, that's not unfortunate that 2 came by, but always nice to have more productive and more folks there. So on the mortgage front, I want to pull something up here. We are testing a new campaign for self-employed. And the test so far hasn't been great. So we may be back to the drawing board. So the idea is this. It is an ad offering 5 special mortgage programs for blank area self-employed business owners and investors. And the results, we have gotten a couple of leads. Mike, we got a ton of comments. Check that out if you would, Mike. That's weird that there's a bunch of comments on that. I didn't even see that until now. We may have to dig that out. But back to the drawing board on that, and hopefully we'll have some better results to share with on what's working Wednesday. What's working Wednesday? Here's what we tried. We tried that copy to a lead ad and a short video. And actually, it's a video version of the actual content, the 5 offers, but sped up. We're gonna try a new 2 ad split test with a static image. So same offer, but just different media. And oftentimes that is the best thing to split test or to try when something isn't working on an ad campaign is just different media. So that's what we've got going there. I'm gonna hit up Jordan. I want to get Jordan on here. I am curious. I'm curious. Hold on here, Jordan. I am curious where I haven't even looked at where rates are at. So I'm going to bring up the rates here, and we'll see what that looks like. Let me share my screen here. Okay, so under 7, down a little bit week over week. Really, we were way up over 7. I didn't even see that. We're up a little bit month over month. Okay, um, all of this information, these details, it's just good to have a general idea of what's going on. So when people are asking about rates or throwing up objections about rates, things of that nature, you can have an educated conversation, and hopefully then at some point pivot to sending folks our way to so we can determine what type of program we may have that fits what they're looking to do. So we are seeing on the start the mortgage application page, we are getting more and more activity on those. I was just looking at that before we went live here. We have had a whole bunch of those come through from various sources and partners over the last 24 and 48 hours. And our team is already setting appointments and getting applications from those folks. Already this morning, we've taken several mortgage applications, or at least sent out application links with people who are interested in starting an application. And so for those of you, if you want to use any of those pages, I'll just bring up, just go and create a free account at wakeup.realestate. If you're watching this now, you probably already have, but if not, go out over and create a free account at wakeup.realestate, and then lead capture tools. And then you'll see that we have a growing number of mortgage lead capture pages, and find ways to use those in your conversations, in your social posts, in your email, whether it's in your email signature or direct email broadcasts, or even text broadcasts, things of that nature. You know what? This is actually a very timely tip. That I wanted to share here. Andre, good morning to you. When you are texting, more and more carriers are blocking texts that have a URL. Okay. More and more are blocking texts that have a URL. Blocking texts that have a URL. So what I would highly recommend is that if you're doing text broadcasts, and here's why this came up. Jordan on our team asked, hey, why when I am texting our credit application, our link to our credit application, why is it getting blocked? And who knows what the answer is, other than carriers are cracking down on that stuff. In part because, I don't know about you, but like I get almost a spam text a day with a link to some Amazon product or something like that. And so carriers are cracking down on that. But what you can and should do is, when you want to send someone a link, use text to sort of get their permission or their engagement around that, and then email them the link, and then text to confirm, hey, I've sent you this link. Please go and check your email to make sure that you've got it. Look at this. Our special guest made it this morning.
Sorry.
No, listen. So I'm going to forgive Jordan. Here's why. Jordan was at Disney World last week, and yet, while allegedly on vacation, making phone calls, speaking with some of you on here live, taking applications, and absolutely just crushing it. Now, you know, maybe he should have unplugged a little bit more. I don't know. That's not for me to judge. But he got and then had to deal with all kinds of flight problems coming back.
Yes,
So
yeah, it
just
was
kind
like
of getting
16
caught
hours.
up.
It was like 16 hours of delays.
Yeah.
So
Plus,
yeah.
he's an hour behind me as well. So we're going to forgive Jordan.
Yeah,
I was just kind of rambling and sharing some feedback on some of the things that we're doing on the mortgage front. We've gone to calling these mortgage and motivation Mondays, our Monday sessions. So I would I think maybe what would be helpful is some scenarios from borrowers that you've been talking to recently, just to get people's gears turning on, what we can do, how we can help, and maybe where, where there's a gap.
Absolutely. Yeah. So I think I've spoke about this a little bit before on your show
Yep.
about three pillars of a mortgage application on really qualifying someone.
Yep.
You got credit, assets, income. As long as you have two pillars, there's always a product out there for it, right? So if you have high assets,
so the three pillars again are
credit, so like credit score.
Yep.
Assets, so like money down, and then income, right? If we can qualify their income.
And
so
assets doesn't necessarily have to be liquid cash right this second.
Correct. It could be houses, equity, anything, thinking outside the box, money that they could use.
Yep.
So if we're missing one of those, that's okay. If someone has a bad credit score, that's fine, right? If they have assets 10% down, we go down to a 500 credit score. I just pre-approved someone yesterday at 512, right? It just depends.
Say that again.
I just pre-approved someone yesterday at a 512. So
I just want that to sit there for a second and let that sink in for folks, because many agents that we talk to have no idea that.
Well, a lot of them don't realize as well. It's not like it's a special program. That's just FHA. Yep. Most banks have overlays where when us as a broker we have multiple banks, and a lot of our banks don't have overlays on FHA specifically. So those banks will go down to 500, go all the way down to 500, where a lot of them will go down to 620, 580. Just depends on what bank you're working with at that time.
But the actual guidelines from FHA are 500 to 580, 10% down, 580 plus 3.5% down. There have been so many conversations we've had over the last few months to basically this year with folks that had no idea that was the case. Just no idea that was
it's the same concept on VA home loans. A lot of people really think that VA home loans have credit score requirements of 600 or 580. They actually have 0 credit score requirements. If the system takes them at 400 credit score, they'll take, they'll do it. Not saying the system will take them. Right. There's there
are other factors involved.
Yeah.
There are other things involved with that.
But same with debt ratios on VA. VA does not have any debt ratios. Technically speaking, they could have an 80% debt ratio and still do a home loan as long as the residual is okay. But I like to talk about the ones that are those are just like general guidelines of just knowing your guidelines and being able to be more flexible. Yeah. I really like to talk about the ones where it's like you're thinking outside the box to get something to qualify. Yep. Right. I don't know, on your show before you've talked about our company does give free credit direction. I owned a credit repair company for a long time, so we do free credit direction at this time. And we do a lot of stuff that is reorganizing and putting them in a position to where we get them to qualify. I'll give you one example of this week. We had a client, debt ratios were too high. It was a VA home loan. Okay. Couldn't qualify in his area for his normal income, right? So he was in an area that was very high priced. The amount of money they didn't really make sense for the average house. It really made it difficult for that real estate agent. Really makes it difficult for that real estate agent to find a house. Yep. The way I try to think about it is not only can I pre-approve them, but can I get that agent to be able to find a home for them?
Yeah.
Am I setting the right expectations for them to go out and find something and be able to actually sell something, right? If I pre-approve someone where the average purchase price is $400,000 in that area, and they only qualify for 150,000, I'm just wasting time
Exactly.
at that point.
Yeah.
So on this particular client, what we did was, one, we refinanced a car out of his name, put it into wife's name. We took wife off the loan because it's not a community property state. Okay, so we took wife on the loan, and he had all the income. Wife was a stay-at-home mom. Was able to refinance that car. We paid down credit cards. I took his credit score within 3 days from a 617 to a 680. Okay, and then we decided that we were going to buy either a duplex or a quadplex. On those terms, on a duplex or a quadplex, you can use 75% of the rent schedule for that unit. So we took his pre-approval was only 125,000. We boosted it up to about 600,000 by changing those little things.
Yep.
Okay, that is just thinking outside the box on that mortgage side. Yep. And it puts him in a position to where if he's just trying to buy a single family home, most likely the agent wasn't going to find something for them anyway, right? We maybe around 225,000, but the average for that area is 400 grand.
Right.
It's not going to make any sense.
And not only that, I mean, it's a financially responsible,
yes, yeah,
way to get started with owning real estate.
I mean, yes, that's how I started when I started ordering real estate. I bought my first house when I was 20, and it was a duplex, right? Lived in one side, rent out to the other side, and started building my portfolio that way. So I talk about with a lot of clients about that financial plan, because it also is going to set up for multiple sales at that point as well, right?
We have a guy in our EXP organization in Minnesota, and that is his niche. That's his thing. Is he focuses on duplexes for first-time buyers, live in one, rent the other, and for the same reason, or one of the big reasons being the same as Jordan. That's how he bought his first property, right? Like that's how he got started, and then he's got that story that he can tell. And if that wasn't you, maybe you have, like when my oldest is ready to buy a property, I'm going to strongly recommend that's how he do it.
Oh yeah. Duplex or quadplex, one of the two. So
yeah.
Go ahead.
Go ahead. Well, so I was gonna, so there's that is a scenario where the 2 out of the 3, we've got maybe a lower credit score, but another program, and we've talked about this a lot, but we're going to keep talking about it because it's we see more and more scenarios where it is helpful, is the no income, no employment program, where you do have to have assets and you do have to have good credit, but we don't have to document, literally do not have to document or verify any income.
I want to clarify good credit, because a lot of people have different terms of what good credit is. Okay. Sure. A lot of people, I guarantee in this room, good credit to them, 700 up, 800 credit score. That's good credit. Yeah. Good credit to us is 640. Okay. You could do this program at a 640 credit score. So it's not, when we're talking about good credit, it's typically 640 and above, 660 and above. Anytime you're talking to a mortgage lender, to me, that is good credit. That is decent credit. Now, these programs that we have, 2 different types of programs. We have an investor program, which is much easier to do, and you could do it a lot more often. A lot more lenders that are available to do it. And then we have a primary residence program. Yeah, I want to give you an example of a client that we are actually doing a double close on. Okay. We had a son wanting to buy mom's house. Okay. And then, but also to buy an investment property. What we found with son, that son worked underneath the table for the last 10 years. Didn't mention on his application. He's been at his current job that is not under the table for about a year, but per mortgage rules, traditional FHA, conventional VA, it's 2 years minimum. You have to have 2 years no matter what of at least work history. So he had never worked a job that wasn't under the table besides this first job, which is very rare for someone that's in the 30 and 40s, right?
Yeah.
Like you wouldn't think about it very often. So with that being said, we switched things around a little bit. We decided to do a cash out refinance on mom. Lived off Social Security. Okay. We did a cash out refinance for a primary residence because she had a free and clear home. Okay. And with that cash out, we didn't have to verify income or employment on it because we had more than a 20% equity and she had a 735 credit score. So we did a cash out. It's a little bit higher rate, not verifying those things, but we pulled all the money we needed out for it. Then we turned around and then had mom and son purchase the house that he was wanting to purchase as an investment property with no income, no assets as well. So in total, we had a ton of assets, right? Ton of assets, good credit, but neither one really had a income. Right. So we had 2 of the pillars, missing one of the pillars, and we're still able to get it done. So we'll double close those, and then ultimately we'll end up once he hits his 2 years, he'll fully buy his mom's house from her.
Now, if your eyes have been glazing over here, here's all you need to know. When you have someone who is motivated enough to have a conversation with you and is expressing interest, we will do everything possible to find their path to making it work, even if it means giving them a plan to get where they need to be so that we can. We're in this for the long term and the long game. So no matter what their situation or scenario is, we will either one, create a scenario like what Jordan just outlined to make it happen as quickly as possible, or give them the plan. Here's what you need to do over the next 3, 6, 9 months so that we can get to this place for you and help you turn that dream of home ownership into reality, or that dream of buying your first investment property into reality. It doesn't have to be, just folks that, their first time.
I with my, obviously I'm a fairly young guy. And I've owned a lot of property, a lot. I started in the mortgage industry when I was 18 years old. So for me, I'm very passionate about explaining and deepening that relationship and explaining them on long-term home ownership.
Yeah.
So no matter who it is, doesn't matter if they have a 500 credit score, 400 credit score, 20% in the bank, we treat them the exact same way. And we try to guide them on a path to either one, purchase a home, but even go a little bit deeper and try to educate and say, hey, real estate makes more money than every industry combined, makes more millionaires than any industry combined. So I try and encourage as much as I can and tell them my story when I talk to them about how I bought houses and built a portfolio and built financial freedom that way. And really at the end of the day, we're going to give everyone a path to get them going where they're trying to go.
Yep. So we're going to come in for a landing here and let everybody know that if you want to join us for our Zoom group coaching huddle, which allows us to be more interactive and we're all on screen and so forth. You can do that. The link is scrolling across the bottom, growwithjosh.com/huddle, growwithjosh.com/huddle. Jordan, I think, will be joining us today.
Yes.
If you have scenarios that you want to run past Jordan, or clarifications on guidelines or whatever, or programs, etc. Here's what I realized. There are some folks in our industry that they want to know all of the nitty gritty, so that when they get somebody that responds, they feel educated enough to to confidently refer them. And then there are others like me that just need to know the bare bones and know that when someone responds, I know what to do or who to connect them to then take it from there. Either way is fine. We want you to be confident and competent when having conversations, right? So, whatever level of understanding or education you feel like you need, we're happy to help facilitate that. So you can join us at 11 a.m. Eastern, growwithjosh.com/huddle. One other shameless plug. I'll also mention, if you go to vqualifier.com, that will walk you through what we're doing when we partner with agents like yourselves and co-market and work collaboratively together. There's a video there with Ryan, and then we are doing twice weekly, we're doing group onboarding for that. Now, if you can't make the group onboarding, we'll be happy to schedule a time specifically for yourself, but that can give you an outline of how we are. Our team is trying to be a rising tide with agents like yourself, where we work together to rise the tide and raise the boat, right? And increase your
true value,
GCI, your GCI, your production, etc. And there are a number of ways that we're doing that. And lastly, if you already are one of our co-marketing partners, you will probably you'll be hearing from Jordan more regularly. He is, we've kind of reorganized the way we're operating the team, and he is going back to being, for our co-marketing folks, a
resource.
the direct point of contact. Yeah, exactly.
A resource to ask questions and correct things if we need to correct things and make sure that we're doing a good job.
Right on. So Jordan, thanks for hopping on.
Yeah, absolutely.
For those who are interested, we'll see you at 11 a.m. Eastern, growwithjosh.com/huddle. By the way, those are Monday, Wednesday, Thursday. Monday, Wednesday, Thursday at 11 a.m. Eastern are when those huddles. And if you go to that link and you register, you're registered for them in perpetuity. You can unregister anytime you want, but you're welcome to join us. Open and interactive. The more, the merrier. Come hang out with us. Bring your scenarios. Bring your questions. And by the way, it's not just about mortgage. It's about marketing and real estate. What's working now? Brainstorming, masterminding, etc. And the majority of folks that join us for those are agents, right? So it's agent or broker centric. So check that out, Jordan. Thank you again, and I'll see you in a bit.
All right, see ya.